Good traders, what's going on? It's January 9th. Right now it's 11:14 a.m. Market is open and strong right now. The bulls are firmly in control at the moment. So just want to update you on what I'm doing right now, just really quick. So I know my chart looks kind of weird right now, but basically what I'm looking at, I placed a put sell earlier at 10:45-ish and did that at 39:05. Now I know the old me wouldn't have even thought about taking this trade because I'm more of a contrarian at heart, meaning that I like to trade reversals. But I think this is going to be a safer trade, and the reason why I looked at this trade is I've been doing some studying over the weekend over this theory called the opening range breakout. And this morning just so happened to really fit that particular thing. So I might do a video on that and explain what that is. But it has something to do with this green and red line right here at the front, not this later one. This is my trade. So that's what I'm saying. I know my chart looks kind of ugly and overlappy right now, but I'm at 39.05 on the put. The market has continued to run away. I actually got in the market on this green bar right here. Our trend line continues to be unbroken. And one thing I want to show you that the old me would have been looking to do, I would have been looking to kind of catch a falling knife here. I would have been trying to look for reversals, look for the stochastics to, break into this level. And I still wouldn't have been in the market right now because I would have been waiting for the market to run out of steam. And I kind of am still doing that because I do want to get in the call spread today because I just don't think the market is going to continue to go up forever. Obviously, this is way too steep. So I'm still looking for a call spread. I thought that I was going to look for one around when the market hit about 39.50, which it just did while I was recording. But we haven't broken this trend line. We haven't made a new low. We haven't, the stochastics hasn't crossed, and I'm going to be patient so I don't face that same situation I did last week. So the one thing I am worried about is that theta is going to run out on me. So I won't be able to get far enough away from the market, but that's why I'm glad that I got this put spread early so that I don't have to feel rushed to perform or anything like that, or I'm missing out or anything like that. So pretty glad I did that. But that's where we're at. We are above R1 right now and heading towards R2. The pivot points are pretty wide today because Friday was pretty volatile. We were up like 89 points, 90 points or something like that. So one thing I am watching as well is this resistance line here. This is mega resistance right here. This goes back to January 1 of last year and has not been broken since. This is a year old. So just like this support line down here was being respected, I expect this resistance line to also be respected at least for a while. And we're heading towards the tip of the pennant. So the market's going to have to decide pretty soon what it wants to do. But for the meantime, I don't think it's going to break out of here unless we get some really good news. But we don't have to worry about that yet. It's coming though. But that's where we're at this morning. Just to show you where I'm at with my trade. If I can get this thing over here. There we go. So there's the trade right there. Put it in at 10:48. We're up $10 on it. Only got $25 in the trade. So I set an alert right here at 39.24, 39.25, just in case I have to step away. If the market decides to fall back, I can, get out or do whatever I'm going to do at that point. But the momentum is up at the moment, so we'll see. I expect it to, if it does reverse on us, I do kind of expect it to consolidate first, because we don't really have any news today that's crazy. So do expect some consolidation before we get any kind of major retracement. But I'll take a look if this alert gets triggered, and that's where we're at. So think that's about it for now. We'll check back in a little bit later, see where we're at. All right. Oh, I can't believe I forgot to talk about this. So my new spreadsheet. So this is where it's at right now. It doesn't update exactly live, but it's decent enough, I guess. So first thing, this ain't gonna work because this is the current expected move, and this is the move it's giving me based on the VIX. And yeah, that's not going to work. So I don't know the math how to convert VIX into expected move for the SPX. So it is what it is, and I don't know how to pull in options data. I don't even think you can from Google Finance. So this isn't going to work. So I'll just have to update the expected move manually. But other than that, sheet looks pretty good. Just giving me my trades, from the open, or at least just giving me some data from the open. What's 2% up and 2% down from the open, all that good stuff. So definitely helpful, I would say. So I'll keep tinkering with it, see where it goes, and yep, that's where we're at. Oh yeah, I also forgot about this. So this particular sheet, the growth sheet, I think I fixed this too. So it looks like it's adding up everything the way I want it to. I was just sleepy last night, and I was just, let me just try this last bit of code or whatever, and it seemed to fix all the equations in here. So I think everything's working properly. I mean, I'm pretty sure somebody will spot it if a number's wrong or not adding up or something like that, but I think I fixed it. So you go in here and you trade with 3,000, profit 120, your full trading count size plus your excess profit. All that seems to be working right. Recycled profit that's left after you take out your 20% here, $24 right there for your daily savings. Your total money's added up right here. Your total savings is added up right here. So I think it's working properly now. So we could use this, I think, to start making some predictions about, or some, not predictions, but goals about, where we want to end up and all that kind of stuff. So pretty cool as well. I've got it going down for a long time. I think like 1,000 cells or something. So you can have it grow as big as you want or as small as you want or whatever. So pretty good tool to help plan out your future trading as well, to see how fast you could potentially grow. All right. What's up, my duderinos, traderinos? We are back for the after hours report for January 9th, 2023. This will be my third time recording this because apparently my microphone stopped recording for some reason. Don't know why. So I had to reboot. Anyway, this is what the day ended up looking like. I think when I last reported, we were somewhere around here, but the market kept powering higher. So we got about to this point right here. So what I did is drew a trend line showing our stops right here. Just continue that trend on up to see when we broke trend. That would be my signal to start looking for a trade. We broke trend right on this bar. So the radar went up and I identified this low right here. So to me, that started to look like we were about to start putting in some lower lows. Lower low right here, lower high right here. And that was good enough for me at the time because we didn't have a lot of volatility in the market, therefore not a lot of premium. So I wanted to try to catch as much premium as I could. But on this bar, I decided to go ahead and try to trade. I like to trade credit spreads, as far as call credit spreads on a green bar and puts on a red bar if I can. So I waited till this green bar popped up a little bit right here. Decided to go ahead and enter the market. I got a 39.80 call spread sent off, and I believe this was 38 points up. So this did meet our 2 times the expected move rule. Didn't meet our 40-point rule, but close enough. And we got between us a pivot point, which always helps. So it just so happened that that trade ended up being at the top of the market today. And from there, the market just fell. So one thing I want you guys to do, I want you to be a little bit more conservative than me if you're just starting out. And I want you to wait to trade until you see a bar like this. Why this specific bar? So what we have here is we have a new low, right? And you may or may not consider this a new high. You have to zoom in to see technically if it's I'm sorry, not a new high, but a lower low. I don't know if that low is lower than this low or, whatever, but it might be close enough. But what I want you to do is wait for a lower high and a lower low. So this is a low. This is a lower high or a same high, arguably. Let's just call it a same high for now. This would be a lower low because this low is lower than that low. This would be a lower high because this high is lower than that high. Once you get a higher high, number one, and number two, a lower high and a lower low, then you are cleared to go ahead and sell a call spread above that, because that signals a change in trend. That's your confirmation that you're waiting above and beyond your stochastics, above and beyond your, your pivot points and your trend lines and all that kind of stuff. The lower high and the lower low really tells the story. So on this bar, that you are confirmed to have both of those things as far as a reversal in the market. Because here, even though it didn't, it easily could have just kept going up on this particular, after this particular pattern, because this is more sideways than a reversal. This kind of looks something like, this area right here, where it just kind of trended sideways for a minute. But this is absolute confirmation. This is kind of confirmation when we broke this particular sideways trend line right here, but this is absolute confirmation. So I want you guys to wait for this so you can have higher percentage of probability of success. But anyway, the market just kept going down. That open range breakout theory thing, I like that, or at least for the 30-minute time frame. I like that for scalps, which are basically just in and out trades. If you're getting in, waiting for a little bit, then get out. I like that better for that versus a buy and hold to expiration strategy. My buddy Vance says to wait, or sorry, if you're going to do expiration trades, that you probably want to do a 2-hour open range breakout. But, I might test that later or something like that. But this just doesn't have enough data contained in it, enough context to really take into account what the entire day might look like. So this is not conducive for my style of trading right now until maybe the account gets bigger and I can do some scalps, some in and out type style trades, some day trading. But anyway, market kept making what's this? Lower low. What's this? Lower low, lower low. Just kept doing that all day. And what's this? Lower high, lower high, lower high, lower high. So that's telling the story. That's telling the trend. And we shouldn't have got into a put today, right? Because we didn't get any reversal signals at all. The stochastics just stayed bottom fishing all day. We didn't get any reversal patterns here. So why did I place this put trade? So this particular put trade, this is an exception to the rule. So what can happen sometimes is the market's going to get up against the wall. The market closes at 4:00, right on the dot. So at some point, the market is just going to run out of time to do anything. Now, there's still going to be some pennies. If you get it at just the right time, there's still going to be some pennies floating around here that you can pick up off the ground. So that's what I did, because the market didn't have time to really make any big moves by the time I got into this. This is 30 minutes before the market closes. Okay. And you can probably do this all the way up to maybe about 10 minutes, maybe 15 minutes before the market closes, depending on the day. So the market just ran out of space to really do anything. So I decided to go ahead and pick up, some pennies right here. I don't have a put on or anything like that. Didn't get the other side of the trade. The market really wasn't conducive to that. So what I did is I drew this trend line, saw where the market was trending on the lower side of where it was going. See all these tails down here? Just draw a line and connect the dots, and I could see the trend. I think I drew this trend line right on this red bar somewhere, or on this green bar, something like that, and identified that we've got some space down here that the market is unlikely to fall down fast enough to get down to these places. So 30 minutes, saw my opportunity, went ahead and slid in at a 38.80, and that worked out just fine for us. Now, if you're a newer trader, again, you probably want to avoid this and just make sure you trade according to the rules that we have established, because these are designed to keep you as safe as possible. This is an exception to the rules, so you don't want to do this unless you've got some experience under your belt, got some miles under your belt. But it's something that you can do if the market's running out of room to move against you. The reason why you don't want to do this as a new trader is because, let's say the market gapped down on us 30, 40 points on the open, and then just kept diving all day, just kept deteriorating all day. What can happen is the market can set up for a flash crash. And that is when the last, 15 minutes, 10 minutes of the day, the market just absolutely dives into the abyss. And that usually happens on really, really negative market days. And this was not that. I mean, the market was only down 3 points today. This was basically just a return to the average as far as a market day. I mean, it looks like it was a crazy day, but it's because we were so far up in the open. But if the market was just like down here, down in the dumps, doom and gloom, the news is like, oh, whatever, something happened. We got FOMC coming up tomorrow, all this kind of stuff, and it's just doom. You don't want to do this trade. But this was kind of like an average day. Overall, from the numbers standpoint, it was a pretty average day, so I felt comfortable going ahead to do that. But that's that. I did get a question regarding pattern day trade, how to avoid the pattern day trade rule. I don't have my Thinkorswim up anymore because I had to restart, and I don't want to start it up, it takes too long. But basically what you want to do is, if you're trading, let's say you're trading this particular put spread right here, 38.80, and you're in profit and you want to lock in that profit, you're ready to go ahead and take those profits. What you want to do is go to the opposite side of your options chain to the 38.80 call spread, and you want to sell that call spread, the same exact strikes. So if this is a 38.80 by 38.75, you want to sell a 38.80 by 38.75 call spread, and it's going to give you a number, a credit of $5, a credit. So you don't want to buy that call spread, you want to sell that call spread. It can get confusing, but you want to sell that call spread. Okay, it should give you a credit of about $5 or $4.95, something like that. But what that's going to do is that's going to lock in your profits for that particular trade, because your original one is going to expire at 0, and the new one that you sold is going to expire at $5. That $5 is going to cancel out 0. You're only going to be left with the profit after everything expires and works itself out. All right, so you can rewind to one of the older videos I did where I actually did a box spread and showed you what that looks like. It's like 2 or 3 videos ago, I can't remember exactly, but just go back through my old videos. You'll see a box spread live where I did one, and you'll see the results. Okay, but it did effectively lock in those profits. The other way you can avoid pattern day trade rule is to trade the futures, which is the ES, and it's different on different platforms. Like on Thinkorswim, it's /ES. Here it's ES1, whatever. But this is not subject to the pattern day trade rule, so you can day trade this all day to your heart's content. Now the dollar values are a little bit different. Like a 5 spread on the SPX is different than a 5 spread here. So you got to figure that stuff out, and you also have to get permission from your broker to trade futures. But once you get that done, you can day trade all day on that. The commissions is also a little bit more. It's like $3 more per spread to trade on futures options than it is SPX options. So keep that in mind as well. Let me see what else. Tomorrow we've got Powell talking before the market opened. Thank goodness, so we don't have to worry about him all day. So whatever he says is going to affect it hopefully before the market opens. But he can talk for a while, so he might still be talking while the market is open. So we'll watch for that. And we've got the big number, the CPI inflation data coming up on Thursday, so we have to watch out for that as well. Spreadsheet, I need to delete. Really, I just need to delete all of this stuff right here because it's not gonna work. Delete, dang it. But otherwise, I'm happy about this spreadsheet. Fortunately, I do have to enter in the expected move manually, but it does give me numbers, so I don't have to sit there with a calculator and lose time calculating stuff. It's kind of got everything sitting there for me. Again, I mentioned that I did fix this, so I'm trying to work on how I want to present this to you guys. It seems like everybody's and their mom's got a Discord or something like that, so I might wait until I get enough subscribers where that makes sense and we can just all have a nice old party on a Discord or something like that. But I did get this working, so this is a good way to kind of project out how you want to plan out your profits when you get them. Again, no other YouTuber or really anybody is really talking about what to do once you grow. They're just talking about the individual trades. So I think this is something that really sets me apart, and I really want people to start looking at this for themselves. What are you going to do once you're the dog that's caught its tail, right? What you gonna do then? Because trading, this is definitely different than trading $500, which is definitely different than trading $40,000. How much are you wanting to risk? How much do you want to save for yourself? How are you going to, live off of this? What are you going to do once you start getting some real money in? How soon should you start taking, profits out of your trading? All of that stuff, you can kind of game plan that with this particular spreadsheet. So, pretty cool. I do want to give you guys access to that, but I'm kind of looking at how I want to do that. And our trading rules. So here we go. You'll have access to this, so you can always refer to this. So in case you can't remember, because I guess, I'm used to it, but if this is your first time seeing it, I guess it's a lot to kind of keep in mind. So I want to make sure that you guys have access to this. But anyway, I'm hungry. I'm about to go eat, man. I'll let y'all tomorrow. Peace.